Newsroom. This is the Dash Trader Newsroom for fall 2021 Winners Circle. We have all of our winners of the #1 Best Trader competition here with me today. As always, my name is Michael DeJoy. I'm Director of Educational Services and a licensed professional here at Dash Trader. And let's just jump right into the news. Another big week in the markets. Consumer sentiment is at its all-time, it's at one of its lows that it hasn't seen in a long time, almost 10-year low, as inflation soars and workers quit their jobs at a rapid pace. I mean, the big question here is whether or not that trend will continue. Certainly inflation has been something that we've talked about week in and week out. At this point in time, every 30 days, the U.S. worker is losing 1% of their effective buying power. This is a political nightmare, but also it does not seem to be transitory. So this, kind of reoccurring inflation problem is now starting to drag on consumer sentiment. And, we'll see how the Federal Reserve kind of reacts to that. But usually the Federal Reserve's response to slumping consumer sentiment is to react by raising rates, which, obviously whether they're able to do that or not is certainly a big question. They have just announced that they are starting to finally taper, which is the buying program where they have been buying assets each and every month, pretty much for the entire duration of the pandemic. Call that quantitative easing infinity. Infinity seems to be coming to an end, at least in the short term. So with that being said, let's jump to the next item of the news, which is Elon Musk kind of going back on his word. At one point, Elon Musk said he's never selling a share of Tesla. Tesla stock is kind of at its, very near its all-time high. It did have a little bit of a sell-off right before when he made the announcement that he would be selling some of his shares. For him, it was a $50 billion pullback, but he did liquidate $5 billion worth, and then he made a further liquidation today, under $1 billion, but certainly a further liquidation. Now, we did see back 2 months ago, just before the whistleblower, ironically enough, we saw Mark Zuckerberg also liquidating a fair bit of Facebook shares. So this seems to be a trend where a lot of these multi-billionaires are liquidating some of their stock. Now, the big question is, does this mark the top of the market? We've had an incredible amount of IPOs. Jill and I had talked a couple of weeks back that sometimes lots of IPOs just means that there's entrepreneurs that have private companies that want to sell their shares to the public. So that could be a bearish indicator if viewed in that way. You add to that, you got a bunch of billionaires that said they are never selling their stock. That could potentially be another bearish indicator. Now, again, all of these things are, the market still sits near all-time highs, albeit with a very, very weak and weakening dollar. So weak dollar, strong market, dollar goes down, markets have to go up. The companies don't lose their value as quickly as the dollar's been losing its value. So certainly there is a correlation there. It's a negative correlation, but certainly a correlation to be considered. So on that note, let's jump to the last item. With all this speak of inflation, we also see cryptocurrencies breaking out to record highs. Ethereum, targeting in at that 5,000 mark and beyond. You certainly have Bitcoin in the area, in the striking zone, getting close to that $70,000, $80,000 per coin mark. You see a lot of institutional holding and institutional buying, in relation to an ETF and the new ETFs for Bitcoin and other cryptocurrencies and ETF futures. So certainly cryptocurrencies have done very well as a somewhat inflationary hedge. But the big question is, and we did have a very, very big move up in gold as well as silver this past week, that with all of this concern relating to inflation, is the glimmer of gold and silver back, the old standby hedges of inflation. Is it time for those to kind of come back in vogue? And certainly the charts are saying yes. Traditionally, this is a very good time to buy gold and silver going into February, meaning that the time from Christmas to February, Christmas being a big time of giving gifts, and then going all the way into the Chinese New Year, and actually just starting a little while ago, I think it's the Indian holiday of Diwali, which is the festival of lights in India. So the combination of Indian holidays, the Western world's Christmas and Hanukkah holiday, as well as the Chinese New Year, is traditionally a very, very good time to buy gold. So there is definitely a gold trade when you add to the regular inflationary concerns, which we've been dealing with for going on 6 to 8 months now, and they seem to be only getting exacerbated, getting worse and worse, instead of being transitory. So it's the opposite of transitory. It seems to be getting worse instead of getting better. So that's certainly something that we're going to continue to keep our eye out for, is the gold trade and the silver trade back in play. And just to give a little bit of insights from a traditional standpoint, silver tends to outperform gold, meaning that when gold is in play, silver does better than gold. It underperforms gold in bad markets and overperforms gold in good markets. So generally speaking, silver tends to be the cheaper, more affordable way to play the gold trade, and certainly that's been the case in these set of conditions as well. But that's enough about the news. We're going to see how this plays out over the next 2 weeks, and Jill and I will certainly give you some insights and follow up relating to that. Now we have one of my favorite times of the newsroom, and overall we get to congratulate some of our winners, and we're going to start with Sebastian. How are you, Sebastian?
Hi, Michael, I'm good. I'm fine.
Let me say a few words about Mr. Sebastian, who lives in Lima, Peru. He is a university student. He's only traded stocks for about 1 year, holding positions between 1 week to a month. So day trading was very new for him. His preparation was to adapt his swing trading strategy to day trading, and very often we see people do that. Swing trading is a 3 to 5 day holding pattern. You just kind of drop it to a smaller time frame, look for the same kind of patterns and setups on the intraday, and then apply it to a day trading time frame. So he was very attentive to the different market events and what would cause great volatility in a lot of stocks. His strategy was to look for stocks that had a good rise during the week, as they could have a greater amplitude. And he used horizontal and diagonal support and resistance levels, moving averages on charts, anywhere from using the weekly to the 15-minute chart. With all this, he looked for a very, very strong reaction points, when a stock hit a certain level, how it would react off that level. Some of the mistakes that he made were entering some risky trades where the exit point was farther away from the target point. He learned that uncontrolled losing trades can spoil good profitability. We certainly saw that a lot in this competition, where we saw people blowing up all of their gains. There was a tremendous amount of volatility in terms of our competitors. We had a couple of guys that were leading, and then they lost all their gains and they dropped off the leaderboard completely. So it was kind of an explosive and volatile day trading competition, which is what you would expect from day trading. Day trading does not tend to be the most kind of consistent style of trading, although we all kind of seek for consistency. So Sebastian, tell me, if you can sum up, what was the thing that you learned most from participating in this trading competition?
Well, I learned a lot about the volatility of the day trading. Maybe you are losing, and maybe you feel some bad, and you have a mixed feelings there. But I know this competition is like this. It's the trading, and I have been following the competition maybe 1 year, and I saw that a lot of traders were like has a huge number, but at the last of the competition they just fall down, and that's why I learned.
Okay, that's good. So what would you do differently if you were to participate in another competition?
Maybe try to keep calm in bad moments. That is the key, and cut that moments fast. That's the best way.
So basically cut your losers short and don't lose your control when you're in an emotional situation or a trade that's going against you. Would that sum it up well?
Yes, that's it.
Great. Well, thank you so much for participating in the competition and congratulations on your third place win, Mr. Sebastian from Lima, Peru. All right, that brings me to our next second place competition winner. Our second place winner, best 964. That's David. David, how are you?
I'm doing well. Thanks for having me.
Great. Well, so just I'll say a few words about David. David lives in Philadelphia, Pennsylvania. He's a real estate salesperson and an equity trader. 3 years of experience focused on intraday trading. His preparation is he journals and reviews his trades every day. That's great preparation and really good diligence. Strategy is as far as indicators, he relied a lot on VWAP, volume weighted average price, and Camarilla pivot points, as well as daily support and resistance levels. Volume analysis, volume price analysis, which is one of our indicators on the Dash Trader charts. Level 2 and time of sales. As for strategies, he focused on R4 breakouts and R4 breakdowns, S3 to R3 traverses. Maybe you can give us a little bit of detail on that, David, when you're, just give us a little bit of further insight in terms of these breakouts and breakdowns that you're looking for, and which encompasses a personal trading strategy that he has called the crucifix. Certainly want to hear about that as well, and I'm sure our listeners do as well. He took very few momentum trades at the open. Some mistakes that he made is he didn't always scale out of a position when he should have. He failed to take profits at certain points. His biggest regret is not having as much time to dedicate to the competition because of work and travel. He learned to be successful in this competition. It's important to focus on his own trading and not spend too much time on looking at the other competitors and what they're trading, and to stick to his own playbook. So certainly I'd love to hear why you found that distracting. I've heard in the past that some of our competitors like to see what other people were trading to get trading ideas, but I could certainly understand, why you'd find that distracting. I just like to hear your thoughts. So why don't you start by telling us a little bit about your trading strategies? I want to hear about this crucifix trade. So go for
Well,
it.
the crucifix trade, I actually was in this competition last year and I came in second place, and I was using a trade that I've kind of given the name the crucifix. But now that in the past year, I read a book by The Secrets of a Pivot Boss by Frank, I'm not sure how to say his last name, Ochoa. And he's really had an impact on how I trade. So the crucifix might now be kind of a bit of a redundant trade. It's really more an S3 to an R3 traverse. I just like the name of it, so I've kind of kept it around. And then
I'm guessing that an S3 is support 3.
Yeah, support 3 on the
the
Camarilla pivot points.
Yeah.
Which I now use. There's also, I used to be a member of Bearable Traders.
Okay.
There's a good trader there by the name of Thor Young, and he's done some good webinars on using Camarilla pivot points. So I've now kind of factored that into my trading style. And then obviously not obviously, but a very big influence was also volume price analysis by Ann Coulter.
Okay.
So before I take any trades, I'm always looking at the volume and also now the level 2, and if it's imbalanced, or it's So yeah, the Camarillo pivot points, I'd say, has probably been the most influential difference in my trading style in the past year.
So if from a percentage basis, so what percentage of your trades were this crucifix breakout and breakdown trade? Would you say it's, just give me a quick guesstimate. Is it, 20 to 30%, 40 to 50%? And then the inside pivot range strategy. I mean, what would that be? So just give me a breakdown off the top of your head about what percentage is what kind of trade.
I would say, well, certainly in this competition, I'd say R4 breakouts probably was my most common trade. I did a few momentum trades at the open that actually were successful. And although those are ones that I kind of refrain from doing, I don't have the kind of the risk profile in my live account to take those trades. My plan kind of at the beginning of the competition was, or the rules I kind of set out for myself were not to take any trades that I wouldn't take in my live account. So those would be maybe the only times that I may have crossed that line. But yeah, I'd say R4 breakouts, S3 breakdowns. The crucifix, I'd say, before, I'd say that 40 or 50%. I was looking for that setup, but now the S3 to the so support 3 on the Camarillo pivot points to R3 just gives me a better entry. So it's actually a better trade just using those levels.
With my own personal trading, because you make a mention here of scaling out. So in my own personal day trading and in all the students that I teach, I always recommend to people to scale out of a position. And on certain trading tactics, not momentum trades on the open, on momentum trades on the open, you're all in, all out, take the money and run. Merry Christmas, have a happy new year, take the money, run, shut off the computer, you're done for the day. But on most other day trades, I would generally sell half, quarter. You're scaling out. Did you find that was a part of the key to getting into second place, was conserving and preserving some of your profits by using scaling techniques?
Actually, I think the one thing that I didn't do that well during this competition was I didn't scale out. I think in the beginning, I was watching these massive gains of the other traders. I knew from having participated last year that people go pretty heavy in the beginning. And so I was kind of trying to refrain in the first 2 weeks from, going heavy into anything or taking any serious risks, and just kind of seeing how the field kind of played out. So even though I said it, I think it's important not to focus on other people's trading. I did, of course, see what other people were trading. And I saw that some of them were low floats. And so, because some people were making massive gains, in a single day. They're making 10,000 on a trade.
Yeah, we saw them also lose 10,000 in a day. So.
Right. And so I was kind of relying on that, hoping, as a bit of a coin flip, they made 10 grand, that the reverse would also be true. So yeah, I just kind of tried to remain disciplined about that. But yeah, so I did keep an eye on what they were doing, but I tried not to let it influence my trading so much. But in terms of scaling out, I didn't, I scale out often too quickly. I'll take maybe 50% off and then hold the rest, maybe scale out another 25% and then try and get out of break even. So, I think that's something that I need to improve. I don't think my scaling out was that great.
That's very
so yeah,
good.
That's something I think I need to work on.
That's something good for us all to remember and consider. Sebastian, did you scale out of your trades? Sebastian, did you use scaling techniques? And what was your opinion for keeping an eye on the other competitors and seeing how the other competitors were doing? Did you find it helpful to watch the other competitors, or was it better to just kind of keep focused on your own trading?
Well, first I try to, at the beginning of the competition, I try to be positive, to have a profit. And then I saw the other competition, and I see, and I think it's good. Maybe they can look for a stock, and you can analyze and take profit of other people's stock, and that's maybe you have more eyes on the market.
Did you
And
trade any of the other stocks that other competitors were trading?
yes, I found, yes, I think yes.
All right,
I
very, very
tried.
good. Well, that brings us to the to our champion this time. That is our first place winner. That is Best 559. It's Michael, who lives in Charlotte, North Carolina, and is a government contractor and full-time trader. How are you, Michael?
Well, how are you?
Very good. Very, very nice to have you here with us. And a big congratulations to you from Dash Trader and #1 Best Trader competition. Let me give a little bit of background. Michael's experience prior to COVID is he would have considered himself a long-term investor in companies with good dividends. So he was a drip investor. After COVID, many of his investments cut their dividends and gave no reason to hold them any longer. So he started to pursue day trading. And at first moved to options and swing trading. Well, first he moved to day trading, but then later to options and swing trading. His preparation and his primary motivation for the competition was to learn the Dash platform, which is great, and I really commend you on doing that. And he feels that he's grown out of his current broker's platform and is looking for something new. And for those of you who are wondering, if you're using, I think TD Ameritrade and IB are interactive brokers, you can actually use Dash Trader. If you're using that broker, you can independently use Dash Trader with that as well. So he watched multiple videos on YouTube about system configuration, hotkey setup, and learned that he can use, and stream the deck for hotkeys, and found that that was particularly useful. His strategy, his two main strategies, was the opening range break, one of my personal favorite strategies of all times, as well as trading off of VWAP bounces, volume weighted average price bounces. The opening range break strategy got him into trouble very early on. It means you kind of didn't manage your risk or whatever, but we're going to hear more about that in a few seconds. So then he focused on smaller size trades or VWAP with a consistent and tight, very tight stops. Very, very good. So mistakes, was that he had a huge problem with FOMO. So first chasing some trades. In terms of what he learned, it was patience and waiting for the setup. I'll tell you, patience is certainly great. And that a stop loss should be much tighter. There's no reason to take extraordinarily large losses. So Michael, tell me a little bit about your trading. I want to hear some war stories related to the opening range break destruction in the beginning of your competition, and how you got it back together.
So I think the first day or two, it was okay. I was mildly profitable, $200, $400 ish. And then I got into something I got in too soon is what it did. I really didn't let the opening range establish first. So then I went long, went heavy, and then it just went the other way. It flushed out. I think I was down like 4%, so about minus $4,000. And then I saw, like David was mentioning, all the other traders were at these huge gains, and they were up like 13%, and I'm sitting here down 4%. And kind of got frustrated with the competition, to be honest with you, and didn't mess with it for about a week. And then that was about the time when I got back in it. I was trading something, and I saw an alert pop up on DWAC, and it had gone up like 300%. And I was in my live account, and I was like, what is this? And I looked at it, and I tried to short it, and I was able to short it a little bit because it already ran up like 300%. And then my brokerage platform, or my broker, ran out of shares to short, so I couldn't do it anymore. So I said, I wonder if I can do that on Dash, since it's all like, it was a competition, so it was kind of paper money. And got on there, and sure enough, I made my $4,000 back pretty quick. And then I looked, and I saw that I might actually win this thing. Mm-hmm. And so then I basically was just doing VWAP bounces after that.
So basically you did your opening range breaks, and it broke you down about $4,000. And then you were able to short the very, very super speculative Trump
Oh yeah.
merger
Yeah.
stock that really blew out a lot of people. I mean, that blew out
Yeah.
a lot of people, also made a couple of people. I mean, so basically you were losing and then everybody else lost. And then that kind of brought you back into the game
Pretty much.
psychologically and gave you a chance to win it. And then you won it because of consistent profitability and
Right.
small gains. You know, and it's funny you should say that because I have seen a pattern in talking about all these competitions, and this is a pattern that holds true to real life trading. I used to tell, and I still tell my students, you make $100 a day, that's $2,000 a month. That's 20 trading days in a month. You make $200 a day, that's 4,000 a month. You know, you just make small digestible gains each day. They
Right.
add up to a meal. It starts to add up to some real profits. And consistent, small and consistent trading rather than swinging for the fences. You know, everybody talks about the YOLO trade, right? The YOLO trade, you only live once trade. That's great until you do it again and it doesn't work and it blows out. And I think I saw a fair bit of YOLO trading in this competition that took a lot of the leaders out of the game. One more question for you. Did you find, Michael, that watching the other competitors was helpful to you? It sounds like it was. Watching the
Yeah.
things that they trade, was that helpful to you? And what about scaling in and scaling out in general?
So with the Stream Deck, you can already pre-program the hotkeys. I have a hard time remembering Control S or Control whatever. So I use that, and I have it already set up and programmed with a picture on it that says scale out 25%, scale out 50, scale out 10, whatever. And it's already, I got it already programmed into DAS. A lot of work on doing that. When I was watching the other traders trades, I mean, I was curious what they were doing. Again, like other competitors said, you know, there were a lot of low float stocks, a lot of things like that. I don't trade those. I stay away from that kind of stuff.
Probably a good idea for everybody.
Yeah. I'm not that kind of guy. I like large cap stocks myself. But I guess if they were doing it, so I made a lot of so the DWAC trade got me back to basically break even. Lucid, I was trading Lucid a lot, but everything I was shorting, even though it was running up, I was essentially fading everybody else. I was seeing what they were doing in these kind of low float, these meme stocks or whatever. And again, in my live account, I tend to not touch these things at all. But in DAS, since I was able to short, so because of the competition, I was able to fade them and pick up a lot of that.
So in real life, if you were shorting these, you would have had to probably pay a locate fee, and you may not have had the ability to short these.
Right. And well, but in my live account, when I'm trading with my money, if I'm going to short something, I'll buy a put. I do options mostly.
Okay, that's good.
Yeah.
It's another way to do it. Certainly an option. This was a day trading competition, so you took the other side and you did the short sell.
Yeah, yeah, absolutely. Yeah.
So in terms of things that you learned, you said that you learned to be patient with your setups and your strategies. Right. So tell us a little bit about the patience and your stop loss changes that you're going to hopefully apply to your live trading or already have applied to your live trading.
Right. So my current broker platform, it's a well-known broker, but it's not working well for me. And everything I've read about DAS, with the hotkeys, the multiple charts, the charts are faster to load, everything like that. A lot of the features in DAS, as far as being patient, I'm able to scroll through the charts much faster because I don't have to wait for them to load. And then the alerts on DAS were really helpful to me as well, where it actually will speak to you and tell you the stock ticker. And I don't like TD Ameritrade or my current they'll ding. And then I got to go find what just dinged. I don't even know what the stock was. So at least it's telling me, Apple has hit VWAP or Apple has hit whatever price level. And that tells me I can get right back to it. So DAS was really powerful and really useful in that regard, as far as because a lot of times I'll be scrolling through, I'm waiting, I'm looking at whatever chart I'm looking at, and I have Twitter on the side, and I'm looking at that, and I'm just as guilty of that. I've actually lost more money following Twitter than I have anything else. So, but I see somebody.
Okay, don't follow Twitter, you twit. I'm
yeah,
just kidding.
exactly.
I'm just messing.
By the time you get anytime you get any kind of alert, it's gone anyway. And so that's what I did with the DWAC. I was like, oh, they're talking about it on Twitter. It's already run its run. It's going to go down now. So
I was just joking with you. Don't follow
Twitter.
No. I just didn't think I was ever going to have the opportunity to fit that into a conversation anywhere. But
yeah, right. Well,
good layup.
Yeah, these people on there is hilarious sometimes. But I just I follow it for.
You're talking about all the people that are tweeting all of their stock ideas and they are totally clueless and
nothing works.
Or they're promoting a stock just because they want somebody else to buy it or whatever purpose is. So that usually it's a good idea to stay away from that noise. But I have to just stress that I think that you're making a great decision to move to a DAS-based broker and using some professional trading tools. It really makes the world of difference using a professional trading tool versus using something that's retail. And look, DAS is also a retail product, but it's professional trading tools that's brought to the retail trader as well as the institutional trader alike. So certainly I think making that move is a move in the right direction for sure. I want to thank all three of you for your participation in the competition. I want to again congratulate Mr. Michael from North Carolina. Great job in your first place in the winner's circle. Now you got a great reason to switch to DAS, as you're going to be getting it for free for quite a while. And you'll even get a great photo op there in the Nasdaq market site with your name and lights. So congratulations to the winners. Stay informed on all things related to the #1 Best Trader competition. Follow us on social media at One Best Trader. Follow us on Twitter, you twit, as well as Facebook. Don't follow all those people that are just talking about stocks they want to sell to you. But certainly follow #1 Best Trader and follow Dash Trader on Twitter, Facebook, Instagram. And if you're not already following us on our Dash Trader newsletter, certainly sign up for our newsletter. A lot of great insights into that. We've been spot on many of the things that we've mentioned in terms of the market trends, etc. Subscribe to our YouTube channel, Dash Trader TV, for our market analysis reminders. And again, follow Dash on LinkedIn, Twitter, Facebook, and Instagram. And a big round of applause to all of our winners. Our first, second, and third place winner, we have Mike, David, and Sebastian. Great job, guys. See you all in 2 weeks.
Thanks, Mike.
Great weekend. Bye, guys. Thank you.
Bye.